Today's big sell-off tried to send some investors into gold, but not as much as you might have thought. Yeah, gold ticked higher a little bit, but certainly not the move many may have thought. Let's bring in Bill Baruch. Bill, thanks for joining us here on set.
Thanks.
Were you surprised? Was it just that everybody was selling so much, nobody had any money left over to buy gold? Seriously?
Yeah, that's a good point, because really, even if you look back at 2008, gold sold off in 2008. It wasn't until the aftermath, when it rallied in 2011, went to $1,900. Went down to about $800 in 2008. So I've traded gold for more than 15 years, cut my teeth on it. I've always lived by the narrative, you don't want to be buying gold when everybody's screaming for it. You want to be capitalizing on gold that you already own at that time. So I think gold's struggling around 1,700 right now. And today, you would imagine it should have gotten out above there. It couldn't. The high in gold, I think, came on the open in the S&P. The S&P sold off another 100 points. And so I think you don't want to chase gold up here. There's going to be a buying opportunity, and it's already up 11% this year. So you look from that standpoint, it's not the time to be buying. It's wait for a pullback here.
What about silver?
Yeah.
That's another great point. Look at all the metals. The metals got creamed. I think platinum was down $30, palladium was down $30, copper was down, silver can't get going. And I think that's another thing you want to keep a pulse on, because when silver finally turns, that could be the really great breakout that could send gold to new all-time highs if silver ever catches that bid. And the other thing to keep an eye on if you're trading gold is watch treasuries, the yields. And one thing that kind of concerns me a little bit in the near term is we've seen when quantitative easing QE1, QE2, QE3, yields bottomed within a month of that every time. So if yields bottom and come up a little bit, that's not supportive for gold. But again, that aftermath is what will help gold break out.
So I got to tell you, been a gold. I never got gold. I never got it. So I thought a lot of the fundamental story was an inflation hedge, right? We couldn't be heading more toward a non-deflationary scenario. How is it that doesn't sort of undermine the gold bull?
Well, I think you're right. I mean, it's a narrative, I think, that's been flipped upside down. I mean, we're going into a deflationary environment right now. And really, I think gold's going to be driving off the dollar. If the dollar's weak, gold's going to be priced off dollars. And again, dollar was down a whole percent, the dollar index today, more than that maybe. But gold couldn't break out. So I think you got to kind of forget that narrative for a little bit. But there's times if we get an uptick in inflation, you've seen supportive for gold that day or that week.
Bill, when you look at Bitcoin, has it helped or hurt? It feels like it's helped the movement or the movement of money back into gold. And if you want to make a headline here, people have talked about $5,000 gold. What's your upside target long term? Do you have any multiple $1,000 target range? Because you hear that it could be the 5,000 range.
You know, I don't put those really absurd or kind of outlandish targets out there. I think it is realistic to see gold above 2,000 and 2,200, 2,500 in the aftermath of this. Speaking of Bitcoin, though, I sort of took that off my radar, my everyday radar recently or turning last year. I think you got to keep a pulse on it. But look, I think was Bitcoin down 10% today? And the fact that it couldn't capitalize on that, I mean, it's not a safe haven. But again, where gold is, you would think it'd be a safe haven capitalizing on a day like this. It didn't. It's the aftermath.
We'll get you back on, talk about more of the industrial metals as well. Wonder what their signal is. Well, listen, all these companies, most valuable commodity in the world, we know what it is right now.
I have no idea.
Thank you very much. It's not gold. All right, let's talk about this. You're a gold guy.
I understand what he's saying. I mean, you go back to, I was actually working in 1987. I remember the day, market was cratering, much percentage-wise, much worse than we're seeing over the last couple of weeks, and gold caught a bid, then all of a sudden it cratered. We saw it again, I think, 08, 09. There have been periods in history where you say, gold should go higher, and it doesn't. It actually makes sense for a myriad of reasons, not least of which source of funds or people getting out of things they have profits in. I happen to think gold, the story is not going away. And again, don't at me, but I think the next big problem is not going to be the rates continue to go down. It's when this genie is out of the bottle and you get this inflationary period where I know nobody thinks it's coming. First of all, there is inflation. The Fed just chooses not to measure it. Another conversation. Second of all, the turn in this is going to be so violent that the Fed's going to have no bullets, and that's when gold's going to be a story. There will be a time this year, in my opinion, where you walk in, it's up $200, people are looking around, and the next day it's up another. You can timestamp that sucker for me.